Hello people, time for an update. First of all, thanks again to all the people. I do receive a lot of emails. I try to get to those. Thanks very much for your comments and thank you for watching these videos. The economy is slowly slipping into the stink hole, if you want to call it that. It's really getting desperate in desperate times for not only the economy but the Federal Reserve and Congress. If you've seen the news, Congress has actually approved on the weekend, has approved the housing market rescue bill that was put forward. Basically what it is offering an emergency package to the financing companies like Fannie Mae and Freddie Mac, basically creating a new regulatory for the mortgage titans and setting up something like a $300 billion fund just to help out all the troubled homeowners out there that are really feeling the pinch of this credit crisis and what is to come in the coming months to year ahead. I guess the problem is a lot bigger than obviously than what you think and what I think. It's getting pretty complicated now. Like I said in other videos, we still haven't come into what I would be calling a credit card crisis. Really, the trouble there is going to be absolutely catastrophic. There's people already in situations where they've lost their job and they can't pay off their mortgage. So how are these guys going to be able to pay off their credit cards, let alone any of the other loans they have sitting over their head? Still seems that oil has come down a lot, which is I sort of predicted that a long time ago, but I mean, people have just become accustomed to paying these higher oil prices. They don't really see through the smoke in the fire. It's basically going to be, oil prices are still going to be dramatically higher, even though oil has sold off a little bit. The prices at the petrol pump haven't really come down too much anyway, so I would still be expecting to see, the price of at the pump go up to, $5, $6, $7, $8. I mean, it's absolutely ridiculous at the moment anyway. And people keep asking, John, what do I do? What do I do, John? How do we fix this problem? How do we do this? Or what can I do? And all the rest of it. Well, realistically, I think you should be keeping it very simple. Simple in the fact that, if you're not really good with the stock market and you don't really know what you're doing, I would probably stay away at this stage. It's a lot of turbulence, there's a lot of volatility in the market. You just have to realize that when one bad thing happens, there's always creates another opportunity. And for me, that would be in real terms the value of gold and silver and that sort of thing. So if you are a little bit hesitant but still willing to partake in something that's going to help you over the next 6 to 12 months, I would be heavily investing my money in gold. Or you will see a crash in the US dollar, there's no doubt about that. If you have large funds in the US currency, you're basically better off trying to switch over to something like an ETF or some of the other better currencies out there, like the euro, the franc, the yen. I mean, I'm in Australia, so even the Aussie dollar, I mean, you could probably invest a partial part of your money in that also. The market is still really in trouble. We've seen a 20-point drop on the market, and that's pretty bad, I know, but you still not have seen a stock market crash. It will happen. You will see a big sell-off day on the Dow where it will go down 600, 700, probably 800 points. That has not happened yet. It will. It's guaranteed to happen this year. I think when people slowly work out how bad this really is, how much in debt some of the big mortgage companies and the big stockbroking companies really are. I mean, I really feel like I'm repeating myself here. I'm sorry if I am, but the people still really don't realize how bad this situation is and how it's going to affect the market. And we really are a few months away from something catastrophic happening on the market. The market is in this big roller coaster ride, 300 points up one day, 250 points down the next day, and it's likely to continue until such point where the floor breaks away, and it's going to be catastrophic. And the large numbers and the write-downs and the banks collapsing that you've seen already, such as Indie Bank, that's probably a bad story in itself. But a lot of the big banks are going to start collapsing, and it's going to be at the moment, people are sort of, it's all brand new because these debts have really caught up to the banks now. The reason that this collapse is going to be a lot worse than other previous ones like the 1987 crash or the 1929 crash is, back in the 1929s when the Great Depression came on board, people weren't really up into debt. There was no such thing as credit cards or big fat loans or anything like that, and it's going to be very bad. And I mean, you can probably predict that it's going to be as bad as the 1929 crash, or it's going to be 3 times worse. But that's not really the crucial element here. The element here is that people's lives are going to change, and they're going to change very drastically, very quickly. Just have a look at the standard of living amongst some of the low to middle class people at the moment. They've had to go through some drastic changes, and it's only likely to get worse in the short term. The Fed up to date, if you really want to know the truth, the Fed have now pumped in something like $446 billion off the printing press, and I mean, it's really not the way to be running the show at the moment. Especially, we're on the verge about August the 5th, where the Fed in the circular table gather and meet up and decide on an interest rate, on the interest rates. Now, if you remember back to 3 or 4 months ago when the stock market actually had all these big 415 point rallies when the interest rate was decreased by like half a point or whatever it was, guess what's going to happen when they decide to increase interest rates? That's right. You decrease interest rates, the market normally goes back up. You increase interest rates, and the market dies in the arse. So, not only is the economy chasing up with people that have bad debts, big loans, it's also chasing up to the Fed. I knew this was going to happen back in January, but now is D-Day. You'll find that there's going to be a lot more turbulence in the market after about the 5th of August, because if interest rates increase, there's going to be a lot of instability in the market. The dollar will get pummeled, and the market will probably come down a little bit also. The best analogy for it is basically you've got a stool with 4 legs and you're slowly sawing away each part of those legs until, once you've sawed off 2 or 3 of those legs, the stool is going to fall over and break. And that's exactly what is happening at the moment. And the credit crunch will continue to worsen. Like I've said, the US and European banks write-downs and the losses will likely stretch out to 2009, which I'm still saying 2009 is the year that the US and the worldwide economies will go into a depression. You can see it coming now. Basically, I study a lot of history, and like I said before, history does repeat itself, and everything that's happening now is happening exactly what happened before the Great Depression. It's quite uncanny how it happens, but that's just the way it's playing out. All hell will break loose. Sorry to be all doomy and gloomy, but it's exactly what's going to happen. It's good. Sometimes the bad state of economies needs to be cleaned out, and a fresh beginning needs to be had. And what you're seeing, the government prepping up all their friends on Wall Street and pumping all this, fake money back into the economy, is only just making things worse, because you're not letting things play out how they really should be playing out. High energy prices that you're already seeing will continue to put a squeeze on US consumers, and they'll drag on the global growth prospects. And the US government are a bunch of criminals. I mean, they really are. Remember what happened back to, let's go back to 2001. What happened? We had a major meltdown on the market. We had all these .com companies increasing in tremendous amounts of money. The capital was huge, but then they realized that these big companies were really, all these companies sitting out in cyberspace somewhere. They weren't real company assets sitting on paper and something you could solidly touch. The market collapsed. But then what happened on September 11 in 2001? That's right. The market collapse totally shifted focus back onto planes hitting the building, which was catastrophic in itself. So you're likely to see another sort of event there, and it's going to happen if the market